everyone, welcome to the Closing Beat. Happy Friday. How you doing out there? Hope all is good with you. This will be our final day here recording this. Hopefully we'll be able to go live on Monday with all new Closing Beat and everything looking good. Trying something a little different, some different software there. So hopefully it'll be ready Monday. Hope you have a good weekend. Anyways, we're playing a game. It's called Guess the Dow. We always announce our winners on Friday, and well, today is Friday. Beth Saputo is our winner, 25250.02. Beth was the closest without going over, and is our winner, has been notified by email. Beth is not a customer of ours, so we will be sending her a gift card of $100. And just so you know, that guess, there were only 7 guesses that were higher than Beth's out of 212 total guesses for last week. So take your guess if you want. Go to jazzwealth.com/guess the Dow. You're welcome to take a shot. Tell me where you think the Dow will close next week, and maybe you'll be a winner. If you're one of our customers, we'll credit you $100. Anyways, let's make this a quick one here today and dive into what happened, because it was basically kind of a volatile day that finished off on a strong note. So we'll cover that. Our Jazz Artist of the Week is Billie Holiday, so we'll wrap up with that. Put yourself some Billie Holiday on tonight while you're just sitting around doing anything. But anyways, let's go over to the markets today. You got basically a flat day on the Dow. We were all over the place, almost 400 points down, 200 points up. Just a wild, volatile ride there with the Dow. The S&P, same thing, but finished the day up about 0.5%. And the NASDAQ was your best performing index today with 1.2% gain on the day. Well, let's go over and look. So if we go over to the S&P 500, you can see we're above the 200-day moving average. That's a good sign for the bulls that are interested. No real fireworks to get us blasting off through that, so that remains a little bit interesting. But other than that, we got a little bit of a gain there. The NASDAQ, like I mentioned, was your strongest. It's almost back to highs. Can you believe it? Here's the prior highs here on the NASDAQ. We're almost there. It's as if the virus never happened for the NASDAQ. The NASDAQ was strong today thanks to tech stocks, in particular software tech stocks and the semiconductors inside of it. If you're looking at the semiconductors, you'll notice names like Intel, 2% gain on the day, ASML, 3% gain on the day, and new 52-week highs, and NVIDIA, very strong day for them, about 4.5%. That helped the NASDAQ be the stronger. The Dow was the weaker one today, and what held it back for the most part was financials. You got Goldman Sachs down 1.74%. Now, I should say this is not a big deal. These guys pulling back, they had an amazing run, the financials, which we'll cover in a minute. But Goldman Sachs pulling back today in the Dow, that hurt, held back the Dow, as well as Boeing. Boeing was down 2.6% on the day, and that's a big weighting on the Dow. So the Dow was the weakest overall. One thing that got some attention was the savings rate. In fact, the Fed started talking about the savings rate. Well, we talked about that last week with you guys. Remember, I showed this chart with you to say, hey, the more money that's being printed and put out there, the more we seem to be saving it. That put our personal savings rate at 13%. That was the last time I shared this with you last week. Here's the problem. The Fed came out and said the personal savings rate is now 33%. So I don't have an updated chart for you, but way off the top of that chart. Most people are hanging on to their money and they're not spending it. We talked about that last week. What's going to happen? You're sort of forcing the Fed's hands there. We'll see. Nonetheless, the Fed says they'll continue to do whatever it takes to keep this economy strong for as long as possible. So that's what or as long as necessary, were their words there. In the afternoon here, you'll notice a little bit of volatility. Look at the 5-minute chart. There you go. Here is this afternoon volatility right in here. Big sell-off in the market, big blast off in the S&P like that. Because of President Trump's press conference, there were just thoughts of maybe canceling the phase 1 trade deal. There were talks of financial sanctions against companies in China, thanks to their sort of new lockdown on Hong Kong. There was all kinds of different things that were being predicted before the press conference. Press conference comes out. He starts off strong. He started out like, "Oh my God, we're going to war." It almost had that tone to it from him, and turned out a whole lot of nothing. We're basically just going to back out of the World Health Organization, terminating that deal. The market was expecting a whole lot worse out of him. They didn't get it, and so that's why we finished a little bit stronger there on the day overall. Hey, quick thing for you. Our FinTips videos this week were the Russell 2000 data and performance, understanding the volatility and performance of that, how often different returns happen and why. And then today we put out the Roth conversion tax sort of video to think maybe more about that if you're looking to do that this year. We've done a ton of those for customers. And the Dough Show today was Fun Friday. We did a quiz, and then we talked about how long should it take you to save an emergency fund for 4 weeks. We just use 4 weeks as an example, given how most people have been sort of off for about 4 weeks, maybe a little bit more at this point, but maybe check that out. All right, let's do our sector breakdown here. Here we go. Winners and losers this week. You got REITs, whether you use the ICF or you use XLRE, whatever you like. Strong week for them overall is a big winner. Utilities also a big winner because we've been seeing a defensive type rally, maybe for the most part every day this week. We've seen a defensive type rally even today. Utility is a big winner there. Financials were a big winner as well. Unfortunately, a lot of those gains came early in the week and have settled back a little bit. Still positive on the week overall. On the downside, you got energy, your big loser this week. It's not that it was a big loser. It just was the one that pulled back the most, and we didn't see much of a pullback there in terms of losses. You've also, interestingly, got communication services and tech, the rare bottom performers, right? And it's not that, you could see on the chart, it's not that they're performing badly, they just didn't perform as well as some of the other sectors there. We don't normally see that. Now, tech is still one of the best performers year to date. I'm sorry, month to date, still the best performer month to date. Obviously, it's still strong year to date. And every sector in the S&P is positive for the month. So that's okay. You don't feel like that sort of thing. Today, a little bit weird. Let's take a look back over here at this one. We'll go to this is the every sector. And that's not how you spell volatile. Every sector was spread out today. Look at that spread on the chart. It was not a real convincing all-in rally or all-in sell-off. Everything was all over the place. You could see the Trump press conference volatility inside of here. You got a spread of about -1% to 1% in terms of volatility there. That's the second widest spread we've seen all week, by the way. And it just was a real choppy kind of a mess for a Friday. I give you that. If we look around a little bit, you got semiconductors strong, nearing those highs there. It tried to break out over this high, but it was a little bit choppy today, so kind of understandable. I know a lot of people are looking for that to break because the next price resistance area happens to be over 150. Decent risk to reward there for people taking a look at that. The XLF, impressive run, of course, this week. It did pull back, took a break, got a little exhausted towards the end of the week. The regional banks were weaker, down 2.5% on the day. It's still working its way off the bottom there, so not a big deal. Industrials looking nice and strong there. Tiny little pullback. Remember we talked about this last week. We pointed out the industrials starting to wake up. I shared this chart with you here, and then I shared a kind of a highlight chart where I zoomed in to kind of show, look, the industrials are waking up over all the other sectors. Well, it had one of the better 5-day gains this week for sectors, up over 5.5%. So that waking up that we pointed out last week, it was, it was spot on. And I can say that because I like to tell you ahead of time instead of saying I told you so. I like to tell you ahead of time so you have a chance to take a look and learn, more importantly, from what's going on here. Anyways, industrials looking really good there. We went over a lot of those this week, give you an idea what's going on. Let's go to the price of gold. The price of gold up 1.4% on the day. 17.51 is where it finished off. Really strong commodity here, just basing sideways in the meantime. This is a normal sideways range for gold. I don't think there's anything wrong with that. Rates a little bit lower on the day. Largely quiet, though, lately, and volatility all over the place today. At the end of the day, hitting near lows if you're interested in seeing what volatility did there. What else do we have for you? Let's do the technical breakdown here. You got 15 new highs, new lows, some that stick out to you. EA, strong momentum there. Electronic Arts. Dollar General, strong momentum there, above that recent high there, if you happen to have that one. Regeneron, this was the one, the breakout. We talked about this one here as a technical pattern yesterday. Broke out today. Look at all that volume. Everybody excited about that one. So pretty cool there. And Crown Castle. This has been a leader along with American Tower, but Crown Castle sticks out as being just a leader in the last couple of days, especially this week. What an impressive week for Crown Castle. And Norton LifeLock, very strong there. New highs, new 52-week highs, everything looking good there. No new lows. For 2 weeks in a row, no new lows. That's a good sign overall. Anyways, technical patterns there. We got Regeneron. We talked about that yesterday. It's already off to the races. Domino's Pizza hinting at a breakout. Look at Domino's Pizza. These equal highs here. A lot of people like these breakouts in uptrends. And if you look at Regeneron, then you can't blame them. Today, a really strong day. Not the heaviest volume you'd like to see. It was above average, but not the heaviest volume, I think, if you could be picky about one thing on that one. Xilinx looking real tight right here, right around the 200-day. Just all day, it was real strong. This is a semiconductor, so we talked about the semiconductor semiconductors as a whole having a similar pattern, just a little bit stronger, right? Nice and tight. You got a series of highs that people can use to kind of gauge what's going to happen. You got Xilinx here, nice series of highs, and the 200-day moving average. Anything above that, people are going to expect about a $100 price target, which maybe a little bit more, maybe just a touch more on that one. We'll see what happens. And finally, your 401k. There you go. Growth stocks took a back seat to value this week. We talked about this last week with value starting to perk up even just a tiny little bit. The growth stocks took that off. People taking money out of the growth, deciding they want to go find discounts. Very normal in this type of market to see that. And so that's what you have overall for your 401ks if you happen to be paying attention. Every week I share that with you just so you can see if you have a small cap growth fund or small cap value fund, you kind of see what's going on. A couple other things, Big Lots on a tear. We talked about this yesterday. They beat on earnings by 86 cents. They killed it, raised their guidance. A lot of people shopping at Big Lots. I don't believe Big Lots even closed during this whole thing. Ollie's Bargain Outlets, they killed it too. Ollie's beat by 15 cents, stronger revenue than expected. Stock was up 4% today. We own that one, so very happy to see that one waking back up again. It's been a wild ride. Twitter shares a little bit lower. The Trump and the Twitter and back and forth, it's going to be volatile. If you own this stock, if you own Facebook had some decent comments to combat that, but if you own these social media stocks, you got, executive orders there. Will they not take away their or add them as considered publishers or not? It's all up in the air. I haven't followed it too closely, so I don't have anything new to offer there, but you're going to expect some volatility. Just hang on tight there. All right, you got L3 back to the 200-day moving average. They are also paying out a dividend, 85 cents coming up if you happen to be an owner of L3. And then you've got Stanley Black & Decker down a touch today, but paying out 69 cents. Its ex-dividend date, by the way. And I think that's about it. These classes feel a lot shorter when I don't have to answer questions, but I will be back to answer questions next week. We will hopefully be doing this live. I'll give you a heads up. There will probably be a few mistakes along the way because we are not a news channel. So we don't mess things up, but we're experimenting, trying to give you guys new data, new things to show, and new things to share. I will wish you a good rest of your weekend if you're one of our customers. Remember, every Saturday we send out our Notes from Jazz email. It will be going out, of course, tomorrow with lots of good data, research, and whatever else I feel like sharing with you guys to teach you. Keep you learning a little bit more and more if you're interested. Enjoy your weekend. We'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.